Good morning. You're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Let's take a look at what happened as far as the global markets are concerned. US markets ending at record highs. They were up in trade. Most of the European markets also ended with a green, but the problem remains the Asian markets. If you're looking at it, the Nikkei is trading down by its move to the red. It was trading with almost 0.5% gains. It moved into the red. The Hong Kong markets have opened with cuts of over 1%. Kospi is down over 1%. And look at the SGX Nifty, and that will give you an indication of what pain we are in for. Down 114 points. So almost half an hour ago it was trading, or 45 minutes ago it was trading down 50 points. The fall seems to be coming in at a much faster pace. So expect a big gap down opening when we open for trade. Probably the second day we will see a drop of more than 100 points on the Nifty. Look at the cuts that have come in on the ADRs. ICICI Bank, Infosys, HDFC Bank, Tata Motors, all of them falling significantly in trade. The only exception being Vedanta, because metals are doing well, and Wipro, because there seems to be a lot of traction among some of the IT stocks. So Wipro is doing well, Vedanta is doing well. Look at the cuts that came in yesterday. 150 points downtick on the Nifty, 200 points downtick on the Nifty, and what's surprising is that the small cap index was up 0.5% in trade. The Nifty Bank, the Nifty PSU Bank also falling in trade, and because of certain banks like ICICI Bank and HDFC Bank not contributing, there was pressure on the Nifty Bank. What did well was the metal pack. Overall, the news of Norsk Hydro aluminium plant being positive for some of the metal counters. Some of the commodities did manage to do well. What didn't do well was the auto pack. The auto pack is trading at record lows. M&M, Maruti, Tata Motors, all the two-wheelers trading at 52-week lows. So the Nifty autos down 3%. The IT actually, after days and days of gain, managed to give up some of the gains. So that's a weak traction that we're seeing. For this week itself, the PSU banking pack was up 3%, Nifty Metal was up 3%, and the media was up almost 1%. So that's the traction. We've been just 2 days in the market. 1 day was a holiday. So in the two trading session, real estate, energy, and auto were the sectors which managed to fall in trade. Now, if you're looking at the fund flows, FIs were sellers, DIs were net buyers. So pretty much it's been a liquidity market that's driven by DIs. The Nifty was down 150 points. What contributed? All the heavyweights. TCS, Reliance, the two largest market cap companies. ICICI Bank were the largest weight on the Nifty Bank, and M&M has a sizable chunk on the Nifty and the auto index. So all of them were down in trade. What was seen as a little bit of positive was basically the metal pack, and there was short covering that was seen on Yes Bank and India Bulls Housing Finance. But apart from it, it was a day that was covered with red. On the F&O side, fresh shorts were seen on the Nifty. Even if you're looking at the bank Nifty, fresh short positions were seen. Look at the open interest build up on both of them. Now, if you're seeing where positions are taken, 11,000 was the biggest support. Then came 10,800, and at this level we are going even below the 10,800. So there will be more selling pressure accelerated, because from levels of 10,800 to 11,000, put writers will have to actually shed positions, because the premiums will go through the roof today. It's just the start of the series, and call writers, the green lines probably will start in much higher. What we'll see in terms of open interest build up and in terms of daily trade, you will see that the red lines will go down and the green lines will come up even further. That's what was also seen in trade yesterday. If you're looking at it, these are the call writers. They want the markets to fall. They will write in today at 10,800. They will write in today at 10,900. Probably they will even start writing in at the 10,700. And levels from 10,700 up to the higher levels, we'll see a downtick on this red arrow. If you're looking at the PCR, the Nifty PCR fell in, given the fact that the Nifty was weak. The bank Nifty PCR also coming in below the 1 level. Now, a couple of stocks I want to highlight. M&M, fresh short seen, open interest build up of 12%, was the top Nifty loser in trade. Probably the weakness will continue. You have Kaveri Seeds. This one saw a downtick in the last 5-7 minutes of trade. Open interest build up was nothing, but there were short positions that were taken on the counter. The third stock I want to highlight is Nalco. Fresh buying was seen, open interest build up of 2%. This was news-based rally that happened on Nalco. And the final stock is Bata. Moved down on high open interest build up of 20%, counter coming in below the 1,000 level mark in trade. So there is weakness. So that's what are the counters I'll watch out for today. But these are all the domestic cues. Let's go across to Bloomberg's Paul Allen for all the top international headlines.
Thanks, Yvonne. Reports from Washington say the FBI hasn't interviewed Supreme Court nominee Brett Kavanaugh or the woman accusing him of sexual assault. Sources tell us the White House hasn't given the Bureau clear authority to speak to them, saying their Senate testimony is sufficient. It's not clear if the FBI wants to seek explicit approval from the White House to interview Kavanaugh and Christine Blasey Ford. Secretary of State Mike Pompeo is backing away from the goal of North Korea ending its nuclear weapons program during President Trump's first term. He's preparing for a visit to Pyongyang next week by saying 2021 is not his target. That echoes the president's comment that he doesn't want to get into a time game with the issue. Pompeo had mentioned 2021 in a statement released 2 weeks ago. The aluminium market faces fresh turmoil after the world's largest alumina refinery shut down. Norsk Hydro is temporarily closing the Alunorte refinery in Brazil because the only area it can use for waste processing is close to capacity. Its CEO couldn't give a timeline for restarting. Aluminium prices jumped as much as 4% on the LME, while shares of other aluminium producers also gained. On Thursday, prosecutors will charge the wife of former Malaysian Prime Minister Najib Razak with money laundering. Rosma Mansour was detained after questioning by the Anti-Corruption Commission. She's been under investigation over $266 million worth of cash and luxury goods seized from her home. Her husband has pleaded not guilty to 25 charges linked to the troubled state fund 1MDB. Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
Well, the stock of the day is Shriram Transport Finance. Why so? Because the company has said that the corporate guarantees worth 650 crores that they had given towards the bonds of group company SVL Limited now has been terminated with immediate effect. Why did that happen? The Shriram Group has repaid those NCDs before time itself, and that has led to the termination of contingent liability for Shriram Transport Finance, and hence it is a positive development. What is the kind of exposure that they had? While the corporate guarantee was given for bonds which had a face value of 650 crores in June 2015, the outstanding guarantee as of March 2018 was about 870 crores. In fact, the exposure has been disclosed by Shriram Transport Finance in their balance sheet, but in the FY18 annual report they had made a separate disclosure, which has led to some derating on the stock with on account of corporate governance and provisioning concerns. Also, SVL's banking facilities were downgraded to default, and that had led to increasing concerns about higher credit costs. What is the implication of this? Now Shriram Transport Finance will not have to bear or at least the overhang of higher credit costs from SVL liabilities goes away, and that's the reason that you might really see some positive move on this counter. If you look at what brokerages have to say, UBS has maintained a buy and a target price of 1550 on Shriram Transport. Aside of these issues, they're saying that the liquidity crisis is likely to hurt growth for the company in the third quarter, but the long-term impact is limited, and this is their preferred pick as far as NBFCs are concerned. Credit Suisse has maintained a neutral and a target price of 1250. They're saying that despite this positive development for the company, they still remain watchful of the group level corporate action. There have been media reports which have spoken about the consideration of a merger with the parent holding company, which is Shriram Capital. They've said that tighter liquidity could pressure growth and margins in the quarters to come, but loan growth rates also may be affected. They have just started returning after many quarters, so you might see the loan growth rates getting depressed again. Nomura has maintained a buy with a higher target price of 1675 because they say that the CV business asset quality has just started seeing a turnaround, and they had applied a 15% discount due to the corporate guarantees that were given to SVL Limited, which now goes away, and hence a higher target price of 1675.
The market is reacting to fundamental things, but there are various factors which outweigh fundamentals of supply and demand. I think the market is reacting more to risks and uncertainties which are leading to price appreciation. And these risks and uncertainties are connected to sanctions and lack of visibility in relation to this topic, and of course to GDP growth rates, global GDP growth rates, which are also affected by sanctions, and there's little visibility in this sphere. And I think that there is little chance that such market sentiment would change during the next month, at least until we have some clarity at the beginning of November. Because no matter what happens to supply and demand, there will always be the risk of sanctions affecting it more. And I think that no fundamentals at this point in time can outweigh that uncertainty sanction factor.
Do you not think the market is pricing in the fact that you're at record highs and that potentially means that your spare capacity is at record lows?
Здесь нужно оценивать не только наши мощности.
I think that we should not only be looking at Russia's spare capacity, but rather at a more complex picture. The market is looking overall at shale oil production growth rates. They're looking at Venezuela and North African production declines. And of course, they're looking at overall spare capacity, which the market currently has. And I mean, I think that only by looking at the complex picture can we understand, and that's what the market is doing.
But shouldn't global trade wars put pressure on prices because the growth is coming from emerging markets?
Well, I mean, of course, there's a direct link between trade wars and potential GDP growth rates. We all know that trade wars mean a decline in GDP growth rates, and this especially affects most major global economies, which depend on trade for their GDP growth. So once they start imposing protectionist measures and going into trade war with each other, I mean, this inevitably slows down their demand growth, their GDP growth rates, and ultimately their demand growth. So overall, I mean, of course, this presents us with a negative long-term outlook if the situation continues.
We always talk about prices when we sit and meet, and there's always a range of 60 to 70. It's at 85, and some say it could be 100 at the new year. Are you worried that prices are too high?
Well, of course, such risks which you mentioned about the oil price, they exist, and such concerns do have some grounds to them. But once again, I would like to say that such concerns exist, and the price is somewhat highish due to a lot of uncertainty factors being embedded into the price. Current levels may be a little bit high. What we think the market would be striving to reach is a balance which would be, first of all, stable and acceptable to both producers and consumers. These levels are probably a bit lower than what we see today. If you've listened to the main panel, to the main event of today, the president has spoken about a range of $65 to $75, which seems to be an acceptable level to both producers and consumers, and at the same time ensures enough cash flow into the sector to reinvest and to allow it to sustainably develop.
A third round of measures being announced to support the Indian currency, and this one is an interesting one. In some ways, it's a twist on the old story of opening a dollar window for oil companies. The RBI has stayed away from that, and we'll tell you the reasons we think they have done so. What they've done this time around is allow oil companies to raise external commercial borrowings in a slightly more liberalized regime. In a notification that came in post-market close on Wednesday, the RBI said that PSU oil companies can raise external commercial borrowings from all authorized lenders, and they can raise this for working capital requirements. Earlier, they were allowed to raise this from a subset, which was direct and indirect equity holders. Now they can go to all lenders and raise these external commercial borrowings. They can use them for working capital requirements, which means that they can use them for their oil purchases from the global markets. The maturity of these borrowings should be 3 to 5 years, says the RBI. They've also relaxed the $750 million limit on individual entities. So that limit has been relaxed, and also the mandatory hedging requirements have been relaxed. There's an overall cap of $10 billion on these kind of borrowings, is what the Reserve Bank of India has said. Now, why are we saying this is interesting? Is because in past instances, what the RBI has done is say that the oil companies can come and borrow dollars directly from the RBI, but that takes away from the forex reserves, and it actually distorts the domestic markets as well. So in some ways, this is a slightly more market-driven solution. They're telling these oil companies, look, we're giving you liberalized regimes. Go out there, raise your dollars, use those dollars to pay for those oil purchases. It prevents the RBI's forex reserves from depleting, and it also prevents distortion in the market, which typically eventually comes back. What are the uncertainties in this story? Well, there are two uncertainties. One, remember, global liquidity is also tightening. So will these oil companies be able to raise money at reasonable rates? A couple of people we spoke to said that they will be able to raise it. The rates won't be as good as they were last year, but they will be able to raise it because these are government-backed companies. And the second more notable uncertainty is that this is a play on an expectation that when these dollars come back for repayment 3 or 5 years down the line, the Indian economy will be better, the rupee will not be under pressure, and hence the oil companies will not have to take a hit. Should the reverse happen, that when these repayments come due, the rupee is actually weaker than it is currently, then these oil companies stand to actually take a hit. So they'll have to take a strategic decision at the board level, and in fact the RBI has said that you need a mandated board policy for such borrowings. They'll have to do it within that mandated board policy, do it prudently, but it's worth a shot.
Shifting focus to currency and bond markets, the Indian rupee yesterday weakened past the crucial 73 per dollar mark after crude oil prices surged to nearly 4-year high as the oil prices inched towards the crucial $85 per barrel mark. Well, the home unit ended 0.6% lower yesterday at record closing low of 73.34 levels against the dollar. Well, speaking of bond markets, sovereign bonds fell the most in nearly 3 weeks as we have seen 10-year benchmark bond yields rising nearly 12 basis points to end at 8.11%. That apart, as Ira mentioned, RBI eased overseas borrowing norms for oil refiners, and traders believe that this move will likely be beneficial for the Indian rupee in the longer term. However, in the near term, the market volatility may continue for some time. On the global front, the dollar index trades near 6-week high, largely on the back of better than expected US economic data. The index trades higher for the 7th straight session, well above the 96 mark in the early Asian hours today. That apart, both euro and pound ended lower versus the dollar yesterday, and both the currencies are in fact trading lower now as well, marginally in the red. Lastly, speaking of dollar rupee, now it is trading at 73.60 levels against the dollar in the non-deliverable forward markets, which indicates a weak opening for Indian rupee in today's trade.
On the big brokerage calls for the day, first we have is Goldman Sachs on Adani Ports. Now the brokerage has maintained its buy rating on the stock but has cut down the target price to around 414 rupees from 455 rupees. Now Adani Ports has been trading lower over the last 1 month on the back of concerns related to dollar denominated debt of the company, potential slowdown in the cargo volumes due to trade wars, and rising bond yields increasing the borrowing costs in India. Now the brokerage says that the weaker rupee will have a significant impact on the profit and loss account of the company but will not impact the cash flows of the company because of the hedging positions taken by the company. On the volume front, it says that even if the cargo volumes slow down by around 10% every year, then the impact on valuations would be close to 8% only. Lastly, it has cut down the target price on Adani Ports as it has factored in a foreign exchange loss of close to 400 crore rupees in the second quarter of financial year 2019. Second, we have is Edelweiss on Steel Authority of India Limited. Now the brokerage has raised the rating on the stock to buy from reduce and also hike the target price to 87 rupees from 70 rupees, which suggests a potential upside of nearly 27%. Now, according to the brokerage, completion of modernization and expansion plans will aid sales profitability as it will lead to operating leverage benefits and improve the product mix for the company going forward. Now, along with this, concerns related to higher wage cost and coking coal cost are now receding and under control for the company, says the brokerage. Now, the brokerage has also raised the rating on the stock on the back of the production ramp up that is expecting over the next 2 years, expected improvement in the EBITDA per ton of the company, and because of the substantial free cash flow generation that the brokerage is expecting over FY20. Lastly, it says that SAIL is a turnaround story as it is expecting the company's EBITDA to grow at a compounded annual growth rate of 35% over FY18 to FY20.
Now, there's lots to talk over through the course of the day, and you will find all the live market action on Bloomberg Quint. But there are also a few stories that you should consider reading on the website bloombergquint.com. Here they are. The State Bank of Mauritius said its Indian operations faced a cyber attack that could lead to a potential loss of about 100 crore rupees. This is the third such breach in the country this year. The Serious Fraud Investigations Office has started investigations into the affairs of crisis-hit infrastructure leasing and financial services and its subsidiaries amid concerns over financial irregularities, according to a senior official. That's a PTR report. And with that, let's wrap on all you need to know. But up next is Indian Open. Stay tuned to Bloomberg Quint Live.